What's going on, everybody? Welcome back to the channel. Jezza managing to do it again. Now, some of you might be wondering what has happened with the cryptocurrency market. We got a flat or a pause on the Fed rate hikes, and yet the market 3% down. Well, I'm going to try and break it down for you in this video so you are fully up to date and up to speed in terms of what is going on with the market and why I am not worried right now. So if you want to know all about that, smash the like button, subscribe to the channel to keep up to date with all the latest and greatest in cryptocurrency. And with that being said, let's get on over and take a look at exactly what we are talking about. So we can see here that 1.02 trillion is the current global market cap, down 2.92%. Now, we did actually see a really solid rise over the course of the last 2 or 3 days. We actually got a pump on the back of the Fed announcement, and then since then we saw a pretty large market correction. And I guess the question everyone's mind is why, and we're going to break it down in just a second. Ether in at 16.49, BNB 235, XRP was in the 52-cent range, broke back down to 47 cents right now. So the market is holding just, it looks like we have found our floor, about 1.02 trillion. Now, here we go. This was the official statement that came out from the Fed, released at 2 p.m. EDT today. It says recent indicators suggest that the economic activity has continued to expand at a modest pace. Job gains have been robust in recent months, and the unemployment rate has remained low. Inflation remains elevated. The banking system is sound and resilient, which we'll always get told it is, even though we know that realistically isn't. Tighter credit controls to households and businesses are likely to weigh on economic activity. The extent of these effects remains uncertain. So nothing too crazy that came out initially, but here's the interesting bit where we get to. So the committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. In support of these goals, the committee decided to maintain the target range for the federal fund rate at 5 to 5.25%. So ultimately, that is the pause on the Fed funds rate. Happy days. That feels like a good thing to do. It supports businesses and households. The rest, he kind of talks a little bit about monetary policy, what it's going to do, what its effects is, how the inflation and economic financial developments will support the US citizen. And then he kind of dropped a bombshell. And this is the bit where the markets kind of didn't like this. Everyone was expecting the flat rate and actually the sentiment to turn more positive. However, the statement it says, in assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goal. Now, we know the committee's goal is 2%. What does it fundamentally mean? There will be further rate hikes. That is the underlying point here, that he is prepared once again to turn the tap open and increase inflation rates. And I think a lot of people, the markets included, priced in that this would probably be the last one. If anything, there's almost a nod there to say, well, he would aggressively go 0.5% if this tightening does not works. I think it's very interesting, and the markets absolutely responded to that. So we can see here on the 5-minute chart is probably the best one. Now I'll have to zoom out quite a bit. So we kind of go to earlier on in the day where we got this market move. So this was the Fed rate here. This is where we got the initial announcement on the Fed rate up, and then we see this big correction all the way down, spiking all the way down to that kind of 25.7 range. Then we saw a bit of resilience all the way back up, and then as the kind of reports came out, as the full economic outlook from the Fed came out, that's what the markets didn't like. And you can tell it's a systematic sell-off because all the coins did exactly the same. So this is BTC. You can see Ethereum does exactly the same. Polygon, Matic, Solana, XRP all follow that exact same pattern, of which we see a significant sell-off from whether that's institution, retail, on the basis of further rate hikes, which no one really priced in. Now, we can also look at this from a statistical point of view, and we can see here this big spike. This is where we got that dump about 8 o'clock my time. And what we actually see there is a huge amount, roughly $20 million of liquidations on the Bitcoin market. So kind of crazy, 19.114 to be precise. And again, you can see it up here in terms of liquidations in the last 24 hours, particularly around all futures and perpetual trading. You can see there shorts and longs liquidation. So lots of longs. So not only do we get a price push down, we therefore then see a significant number of perpetual futures got liquidated in the last 24 hours. All in all, what does that mean? Aggressive push down in the price on the market. Now, when we actually try and look into the Bitcoin market, it does feel like we found the bottom here around 24.8. We were looking on the live stream where liquidity sits, where these kind of pockets that they're looking to get market makers to get to. We're looking to support from currently the 7-day EMA. We're just trading underneath it a little bit, but look, we'll see. Fed days are always crazy to understand. We generally see what we call a W formation, which we see a nice little push into the market, it dumps. On the back of the announcement, we then see a small relief rally to a further dump, and then the market recovers post the Fed rate. So what do I expect? I think we'll see some positive crypto movement in the next 24 to 36 hours. Now, there are some coins bucking the trend. We see something like USTC on the verge of the reap peg. Casper's doing okay. There is a number out there that are still significantly trading well. Bitcoin, though, being the one that we all want to see what happens. So look, the next 24 hours is going to be very interesting as the dust settles and people understand fundamentally what does it mean to them. We could see a relief rally. But let me know in the comments down below, what do you think of the zero rate hikes? I'm very interested to know what your thoughts are. And as ever, thank you so much for watching the video. If you haven't already subscribed to the channel, do so. We are getting on the journey to 20k subscribers. Can't believe it. Absolutely insane. So thank you every single one of you for all your support. Leave a like on the video and I'll see you all in the next one. Bye-bye.